I just wanted to show you the very simple steps I take when I'm carrying out technical analysis in the market. So one of the first things I do is that when I open my charts, I like to start up with a very fresh chart so that I can get a fresh perspective of the market. And then if there's something I looked at, maybe I didn't look at correctly before, this time around I have an opportunity to look at that all over again. So I like to start from the weekly time frame. And when I look at the weekly time frame, one of the first things I observe is that there's a low here, there's a higher low, and then there's also another higher low. So what I like to do is I take a trend line and then connect the lows. It's not going to be exact, but at least you need to get 2-3 touches on your trend line, for it to actually be a very, very valid trend line. So now I've connected the lows, right? Now I look at the highs. See this high, this high, this high, and then this high. Now I pick up this trend line again and I connect these two highs here. Connect these two highs. It's always very important to account for recent data. I would have just pushed this up here. So if you take this and then push it up here, it's going to look something like this, and that's not going to be very, it's just going to be very awkward looking at that. So you have now it's starting to look nice, starting to look like a very nice running channel. Now there's this problem we have in the market, and there's most strategies in the market that traders trade are actually based on support and resistance. I'm not saying you can't make money trading support and resistance, don't get me wrong, but support and resistance has a lot of problems. Like for example, look at this market now. Support and resistance trader will come, look at this area, resistance, and now here the market has broken through this area, and you could be looking at it like, the market is testing it as a support now to go long. There's a possibility that might happen, but when you look at that, they take something like this rectangle here and then they connect that line into a support line. Excuse me. But when you look at that, it's the obvious, right? What you want to avoid in the market as much as possible is you want to avoid the obvious, because if you are trading in a market where the statistics has it that 90% of people are not making money, then it means you want to avoid whatever it is that 90% of the people are doing. You want to avoid that. That's how you actually get shot in the foot. So now looking at this channel, I've connected these lines here on the weekly time frame. The next thing I want to do is I want to drop down the time frame and start to see price action clearer. Right now, take a look at this. We go down to the daily time frame. What do I see on the daily time frame? Nothing much, right? Just choppy, annoying coronavirus bullshit. Like just you see price waking up and down, not really having a clear direction all around here. So what you have to do is you drop down the time frame further and you go down to the 4-hour chart. Now looking at the 4-hour chart, we have more stories here. We have more price telling us more story. Right now look at the price. You see the market came up here, right? And I was looking at this price around the time it happened. I was looking to take a sell as a double top, but then I knew that the market was going to break the high. I think I spoke to a friend about it. Then the market actually broke the high, and then came right back down. But looking at this, when we look at this on the 4-hour, the first thing we see is we notice a high, a lower high, a lower high, then another lower high. So what you want to do is you want to connect these highs with a trend line. You could do it this way, and you will be correct. There are traders who will draw it this way and you'll be correct, but I like to draw mine from week to week. And if you start drawing it from week to week, you really have to be consistent with that. You don't draw from week to week today, you draw from body. No, you have to be consistent with however you're drawing your trend line. So this is how it will look, and then you can see I've connected the tops, right? Then the next thing is I want to connect the lows. Where are the lows? I see this is a gap here, but then the obvious lows will be this one and this one. Then all I have to do is pick out the trend line again and connect the lows. So you can actually start to see that price is beginning to build up a story for us right here. Look at this. So what is this? This is what you call a falling wedge. And a falling wedge is, of course, the price is falling. That's what it means. But then as the price is falling down, as the price is pushing down, the range is getting smaller, just like what we might have around this area here. Now, support and resistance traders, once again, you really need to avoid looking at the market on the basis of support and resistance. Support and resistance traders will come into the market, look at this and say, oh, this is very nice, this was support, market broke it, now the market is going to retest, Now the market is going to retest it and go short, and then they sell the market. Now I'm not saying that's not likely to happen. There's a possibility that might happen. But how about if there was a way that you could look at the market in such a way that you have more efficiency? Look at this. You pick out the trend line. What if the market actually did this? Pushed up, came into the zone instead, made the third touch of the trend line, and then pushed down, right? Or what if the market came down, pushed down here, pushed up, and then pushed down? How about that? How would the support and resistance account for all these moves here? Now, I'm not saying support and resistance traders are not going to make money, but I'm saying you have to look at the big picture and look at the patterns that are evolving in the market. This market is governed by structure and patterns. That is what governs these markets. Now, another problem we might have in terms of support and resistance is why I don't trade support and resistance, why I don't like to look at support and resistance, is that it limits your profit potential. For example, let's just say the support and resistance trader has gotten the move right. Okay, let's say the support and resistance trader is correct. Is there anything in his strategy that will tell him that the market is 90% of the time going to test these lows again? Does he have anything in his strategy that will tell him that the market is going to test these lows again? Now, most support and resistance traders, they will look at this area. Okay, this looks like support. This resistance became support. Then they might take a target. Let's say that the retest is here. Then the target is the retest is here. Then they have a target somewhere around there. 263 pips. That's fine, very fantastic, right? But what if you could make more? Or maybe, for example, there's another, this is a resistance support. We take the support line again, then put it here, drag it over, then pick out the position. So then, okay, what happened? 454 pips, stop loss right there, 146. Very nice, okay, very nice. But what if you could actually enter at this level? There is something in your strategy that gives you the opportunity to enter at this level, at the touch of this trend line, and you have a strategy that you can hold the trade all the way to a retest of these lows. What's the difference? Look at that. Just look at how big that is. And that is why you should look at the market on the basis of a bigger picture. Now, this market looks to be heading downwards, and when you're analyzing the market, always account for two scenarios. We could automatically push out. This market could push up, break this line here, break this descending trend line here, retest, and go long, and just push up, and maybe head all the way to 62,000, who knows? But of course, we're not going to be taking it on the basis of a break and retest. The Chicago trading strategies, quite different from just taking break and retest and all those kind of things. So, but this is how I would find out. This is how I would analyze the market technically. So I would try to find zones where I'll try to find points where the market is touching multiple times, and then connect those zones, and then see the story that price is telling us from those zones. Then ultimately, we want to hold the price or hold the trade for the longer term to a retest of the lows, because 90% of the time the market is going to come back to retest lows. I've back tested it, I've tested it online, checked it several times, and I've seen that the market always goes back to retest the lows and the highs. Like, this is not something I'm making up. You can go through your charts yourself, check it out, and see that the market is always going back to retest the lows. So that is why when I'm holding my targets, I like to hold it all the way and then grab those full pips the way they are. So this is how I would analyze the market. Start from the higher time frame, find out the overall structure. I've seen this running channel here, I've seen this channel here, this touch, but then I drop down the time frame, try to find out the story that price is telling me. This price, I think my internet is slowing down a bit or something. I'm not sure what's wrong with the internet. I'm not sure what's going on. Okay. Yeah, but that's it. Overall, I'm not sure what's wrong with the internet. I think the internet it just disconnected me, just cut me off and all that. Yeah, but I was going to show you another pair. That was when that happened. I don't know what's going on, but I was going to show you. I was going to pick out another pair. Okay, so finally it decided to load up itself. So we've connected this highs. This is how it's looking. Falling wedge. We don't see it clearer until we get to the 4-hour time frame, and even clearer until we get to the 1 hour. Of course, at that point it starts getting bigger and bigger, and then you start to really see the market for what it is. So always start from the higher time frame, preferably the weekly time frame, marking the zones, and then let's see if I could pick out let's pick out a fresh currency pair that doesn't have any analysis, and try to analyze that. Okay, I must have analyzed. Yeah, this was back when I haven't looked at this in a very long time. This was an old analysis and all that. So go out to the weekly time frame, like we did. Weekly time frame, US dollar, Danish krone. What do we see? Same thing. Low, higher low, right? High, 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 high. This was basically an uptrend. This was a market that was just clearly in an uptrend and all that. So pick out, connect these two. Pick out, connect these two, right? Connect these guys. Now, one thing we know is that whenever we get to the highs, what do? We start looking for opportunities, because the market may just reverse and come back to test the lows. Most of the time, 90% of the time, we are coming back to test the lows. So this is a major high here. You don't need to put the support and resistance line. You can just use a ray line, but that's not very necessary right now. So this is what we are looking at. This is an ascending channel. This is what we are looking at. We've marked in the channel on the weekly time frame. Drop down the time frame again. We'll go down to the daily. I'm not sure what's wrong with the internet. It's just really becoming weird. Okay, so now we're here on the daily time frame, and sorry, I like to make sure I'm touching it very well. Perfectionist guy here. So yeah, so daily time frame. Do we have much story? What's the price telling us? I think we can see this low, higher low, higher low. Can we connect those? Okay, maybe we can. But of course, since the price is not telling us much, next thing we have to do is drop down the time frame to the 4-hour time frame. That is where we start to see the price for what it is. We start to actually see what's going on in the market. Now, what do we see when we look at this? We see a high, a lower high. Don't forget, what do? We connect them, right? We connect the highs. Oh shit. Okay, sorry, clicking that. So we've connected these highs and these highs. Now what do we see again? See this low here, see another lower low, right? Next up, we connect. Can you see how this is just nicely building up? Just observe the highs, observe the lows, connect them. Very, very simple. So maybe if you wanted to take this as a trade, maybe you could come here. Just I'm not going to go into my strategy and all that. So this is it. We have a running channel already. We are at the top of a channel. So what's the next possibility of something we might have? So we're expecting price to give us a third touch. We're always most likely going to get that total. We're going to 1, 2, 3, and then push to the upside. So something like, let me pick out this brush tool. 1, 2, 3, then we push up. 1, 2, 3, we push up. Then on the sell side, we have a 1, 2, we have a 1, 2. Then the third one, there's always a push to the downside. Now, what I'm expecting to see, this is US dollar, Danish krone. This is the currency that I've seen to have had probably the highest and the strongest correlation with the dollar. So we expect the market to either give us a straight run down to this point, expect the market to push down all the way to this point, or push up, touch this trend line, this channel for the top of this channel for the third time, and then run down. But either way, with what we are looking at technically on the chart, we are expecting price. We're expecting price to rally to the downside on this particular currency pair. And as you can see, this is just how very simple that is. Connect the highs, connect the lows, and then find what's happening in between. And then you have, like, the strategy we used to enter this one on the lower time frame was very different. When we're looking for entries, we have very, very specific rules that will be meant for us to actually enter the trade, and then we have our risk management in place and all that. So you can see in just a matter of minutes, I've analyzed these pairs, and then all I have to now do is, if I wanted to take this trade, all I have to now do is just wait for the market to meet my rules, and then I'll take the trade. But remember, in the long run, when you're trading like this, you'll be having a much bigger target on this pair, much bigger target, something that looks like that. You're having a much bigger target. Unlike when you're trading support and resistance, I don't even know what those guys do when they see this. They'll say, okay, oh my god, support here, support, this is resistance, support, resistance, resistance, support, support, oh my god, it's time to buy. So they buy, and the market plays a bit in profit, put their stop loss here. The market plays a bit in profit, so maybe they have a target to somewhere here, or they are targeting this high at this level. The market plays a bit in profit, probably almost hits the target, then boom, meets this trend line, turns around, stop loss is hit, and then those of us that actually trade the market for what it is are in profit. So this is the simplest way to do your technical analysis that I personally use. This is the procedure that I use to carry out technical analysis, and I hope you've seen the simplicity behind the strategy. No fancy indicators, no spaghetti on my chart, just pure naked chart, and very clean technical analysis. So please like and subscribe the channel, the YouTube channel, and also join the Telegram community. It's free. We carry out analysis like this on daily basis, and then free signals. So there's no premium channel for now, so kindly join us in the community. Thank you. My name is Susanna Chikwado. Enjoy.